Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday. It's August 2nd here. We just got a couple economic news releases to go over today, but they're pretty big ones. We got personal income for the month of June. So back in May, we had a 0.2% increase for income. Forecast was supposed to go up in June, but it stayed the same at 0.2%. So 2 months in a row, we had 0.2% growth. So a little disappointing on that section. However, obviously we are seeing that consumer spending is is still ongoing. So even though people weren't earning more money, they were spending at a good pace here. So instead of saving, they were spending. So which is good for the economy here. So back in May, we had a 0.4% increase for spending, and for the month of June, it was supposed to continue that same trend, and it did go up at 0.4%, came in expectation. So that's the one good news. However, we got the core inflation. This is the PCE, or also known as the personal consumption expenditure. And when you strip out food and energy, we get what they call the core inflation. So we have a 0.2% increase for the month of May, but June the forecast is supposed to dip down to at a lower pace at 0.1%, and it came in at forecast. So that basically leaves our year over year at 1.6%, well below our mark of 2%. It remains the same. We were at 1.6 and we remain at 1.6%. So the Fed likes to see that go up, and that's why you're not going to see the Fed probably too much of a hurry to raise interest rates, as it's still at a low level here from where they would like it to be. Right now, the stock market's down. It's taking some of the data where you're seeing here from the low inflation to the consumer income to also looking at different parts of the earnings reports that are out there. We had auto industries aren't looking too good, so overall the stock market is down as we speak here. So as a result, we had after that nice rally on Friday, we've lost a lot of that ground here. We touched off the 25-day moving average. We had a price for the worst, so pricing got worse as the day went on. We dropped about, I think it was either 25 or 28 basis points total from where we started, or from where we left off on Friday here. So we dropped quite a bit, and then today we're started off much lower as well. As you can see, we started off right about the 25-day moving average. We're hunkering down a little bit lower than the 25-day moving average. It was at, right now we're at about 9 basis points lower. So hopefully you locked in your rates. If you're working with somebody, they locked you in your rates, because this could basically what this pattern is kind of showing us, that it could easily switch directions here. And with 25-day moving average, this could also become a, as we saw before, it could be become a ceiling instead of a floor of support. So it could be more difficult for us to break above it. So again, rates are a little bit worse today as a result of where we're positioned at this moment here, and we will hopefully get a spike a little bit. Hopefully, a little bit of help from the Fed. They're buying mortgage-backed securities and treasuries today, so hopefully that will help us out a little bit. We'll see as the day goes on. Maybe it'll rebound a little bit, but when we're testing the floor here, it's not usually a good thing. Unless we spring forward, but right now we're not seeing any signs of any real help of it kind of boosting it further right now. All right, so be very cautious here if you are kind of floating your interest rates. Remember, this week we got jobs numbers, so tomorrow ADP will come out. We got the weekly jobless claims on Thursday, and then of course the big one by the Bureau of Labor Statistics on Friday. So be very cautious this week, as we're going to really be looking at those jobs numbers hard, especially after the last FOMC meeting where they were pretty hawkish in their comments. All right, have a great day. Thanks so much for watching again. We'll see you guys tomorrow. Bye.